Co-presented by CoinDCX, your gateway to crypto. Co-powered by Green Lamb Laminates, Har Gustakhi Saaf.
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. Dalal Street at a 4-month high. Nifty ends above 17,500. Sensex gains 465 points, led by auto, power and metal stocks. Rupee weakens sharply to 79.6 as the greenback surges globally. The dollar extends gains after solid US jobs data lifted expectations for more aggressive Fed tightening. Bharti Airtel reports a healthy set of numbers with profits zooming 466% year-on-year. The telco's average revenue per user jumps to 183 rupees. SoftBank posts a record $23.4 billion loss. The Japanese giant's Vision Fund segment saw one of its biggest losses for a second straight quarter as tech stocks continue to get hammered amid rising interest rates. Later on the show, we get you an exclusive conversation with SBI Chairman Dinesh Kumar Khara on Q1 earnings, rate hike and state of the Indian economy. It was a second consecutive day of gains on Dalal Street, with markets rising to a 4-month high on the back of positive global cues. Foreign institutional investors remain net buyers in the capital markets. Sensex up 460 points, shutting shop just a little shy of 59,000. The Nifty reclaiming 17,500. Coal India, M&M, Bajaj Finserv, NTPC and Hindalco, some of the top gainers. SBI and BPCL, some of the top losers on the Nifty. Weaker than expected Q1 earnings playing spoilsport there. Ultratech Cement, Britannia and Hero Motorcorp, some of the other losers in today's trade. The Paytm share price surged to its highest levels in nearly 6 months. The stock rallied over 6% after the company's parent firm, 197 Communications, posted an 89% surge in its quarterly revenue. Paytm, which competes with Google Pay and Walmart-backed PhonePe in digital payments market, said it's on track to achieve operational profitability by September 2023. The stock has jumped over 45% in 3 months and is now among the top-performing fintech stocks globally. As markets scale a 4-month high, market guru Dharmesh Mehta of DM Capital Advisors remains confident of the upward trajectory. He adds that markets won't test the earlier bottom. Also talks to us about the upcoming IPOs, banking space, and he believes that manufacturing will be the sector to bet on. Listen in.
How are you reading this big pullback in the market? I mean, does it have more legs to go, or is this the point where you start getting a bit cautious again?
I will be cautious again. I think the markets have rallied in a strong way in the last 1 month, as you've seen. And as we say, the winter is coming. So we need to wait what happens in winter, especially on the geopolitical front. So I wouldn't get too much carried away on this current bullishness and would be very cautious in my approach going forward.
What is behind this pullback? I mean, is it only the fact that there has been consensus pessimism before the start of this pullback, or do you think the fact that there is some return of FII money which has lifted the mood in the market? Are the roots technical or are the roots fundamental to this very strong pullback?
I would say some part of it is fundamental also, because if you look at it, the inflation looks like peaking out. The commodity prices globally have peaked out. The rate seems to be peaking out now, I think so, especially in India. So overall macro environment has actually benefited India in the last few months, as you can see. And the worst fears which people were thinking of, higher inflation, higher interest rate, that doesn't seem to be coming true. So a little bit pullback is based on that because of the softening of commodity prices globally. And overall, I think the market was oversold in the recent months. And still liquidity in India is very strong. So if you look at it even today, I believe the mutual funds are still on all-time high cash. And despite all the paper supply which came in last 1.5 years, and the debacle of 2 large IPOs, even post that, the retail interest is still very strong in India. And that has also taken all the selling pressure from FIIs. So liquidity is good. India looks like a safe haven and much better place in global markets. that's the reason I think so some pullback has happened. I still believe that's more domestic money rather than foreign money.
How do you see the domestic money behaving from here on, Dharmesh? I mean, when you speak to HNIs now or even retail, do you get the sense that they believe that the road ahead could be rocky and they're probably taking some money off the table? Or do they believe that the market will get back to highs sometime in the next couple of quarters and they're actually very gung-ho and bullish?
I would say retail interest is still very strong, but yeah, they're also very cautious, and I won't be surprised if there is some profit booking coming in next few weeks or months. So clearly they have money, but they are cautious because they understand that the geopolitical situation is still not in a great situation, and that can suddenly overnight turn ugly. So clearly they will be cautious and booking some profits in the coming months.
All right. Clearly, Dharmesh, while opinion is clearly positive for the India story in totality, but currently that little bit of concern with regards to whether or not this is just some amount of traction before we once again see a bit of a sell-off, that question remains. If we dive into that a little bit more, what do you feel would be the biggest factors that could possibly lead to that at this point? Would that be largely tech-driven? Because most of the other factors at play right now have been largely priced in.
See, if you look at overall our index composition, I think so financial sector looks to be in a good shape. The banks are still reasonably valued. So I don't see a large downside in the banking sector. The large heavyweights like Reliance, ITC, they're also in a good situation. So there is a limit for the index to go down substantially. Okay. I think so there's a downside protection also for India. But the upside will also, the other problem is that India has outperformed all emerging markets. So clearly the upside also will take time to come. And only when the fundamental situation changes and when there is a risk on bet in the global world, will you see if FI's money coming into India, because India has outperformed. So it's not the first market people are dying to buy into, but they will start buying as soon as they see, the risk of global risk is off and they want to start putting money into emerging markets, and obviously India will be the first choice for them. So I see some kind of, stagnation coming in the next few months, and will take based on what the events happen in the coming few months globally, and on that basis, more money will start flowing in.
So you think, Dharmesh, there's a chance that the market will go back and revisit the lows of, say, around 15,200 on the Nifty, where we bounced back from, pierce it and go lower? I mean, what is your expectation about the bottom formation?
I don't think so we'll test the bottom which we tested earlier, because things are improving for India, as I said, in this quarter onwards. Because of the fall in commodity prices, we have had a decent monsoon so far. So the inflation has also peaked out. So I doubt that we'll test the bottoms, but I think the market will remain flat for some time. Look for events. And when you see, numbers coming back, because we still just seen one quarter of numbers post the oil price hike. If you see demand continue to grow in even not in a very strong way, but decent manner, I think so market will steadily climb up, but definitely doesn't look like testing the earlier bottom. Unless oil goes to $140, $150, then all bets are off.
Financials have started improving in terms of market performance after a long time, and their earnings are holding up reasonably well. But the underperforming sector which has started to come back in the last few weeks is autos. I mean, it's a clear standout sector. I mean, the M&Ms and Marutis of the world. Where do you stand on that lot?
I would say you will see decent demand coming back, especially with good monsoons. And we're still not yet out of the monsoon. We still have 2 more months. But so far, it looks very encouraging. And if the monsoons are good, generally auto sector should do well. You have big festive season coming in. And with inflation taming down, I think so even the festive demand will also pick up. And autos were oversold, as you can see, last 6 months back. I'm reasonably bullish on auto sector.
Huge IPOs that have been shelved, Dharmesh, given the market volatility, given the kind of valuation we've seen some of the original listings trading at currently, do you feel there'll still be market appetite for some of these IPOs when they hit the markets over the next few months?
See, I would say that the door is shut, but the window is still open. So you will see a few IPOs coming in the market at a reasonable valuation, and they should get demand. I expect few IPOs to, at least we are leading one IPO, which hopefully should be hitting this month. And selectively, few IPOs will happen. Yes, there are almost like 125 IPOs which have been filed and more will file. Not all will go through, but it's not as if none will happen. Some of them will go through with reasonable valuation, and yes, valuations will get corrected a lot from what people were expecting earlier.
What are you cautious about, Dharmesh, after the pullback? What sectors would you stay away from at these kind of levels?
Well, I would say still the global economy is in trouble. So I would stay away from sectors which are very much dependent on global economy and global growth. So that will be clearly something which I would be really cautious of, especially if the valuations have gone up in the recent times. I would still rather be placed on India bets, especially manufacturing, which I think so with the government scheme of things, the kind of reforms they've been talking about, I think the manufacturing will be a very, very strong sector to bet on. So anything which is domestic, I would rather focus on that. Global sectors, I will still worry about.
All right, and to catch that entire interview, do tune in to businesstoday.in or to our YouTube channel. Let's take a very quick break on that note. More top stories when we come back.
Do you want to hear dead people? Well, you might in the near future through Alexa. Amazon is all set to go a notch higher in the tech world with the introduction of its latest feature of Alexa. During Amazon's Global Artificial Intelligence and Machine Learning Conference, Alexa AI gave an unusual demo by mimicking the voice of a dead relative to a child. Yes, you heard it right. Through the use of artificial intelligence and recent advancements in text-to-speech technology, Alexa will be able to mimic someone's voice using less than a minute of recording. The AI may not eliminate the loss of your loved ones, but it can definitely make their memories last longer. While this may be comforting for some people grieving, a lot of netizens are feeling uneasy about the whole idea. Especially Twitterati is quite apprehensive and using hashtags like creepy and morbid for this new Alexa feature.
Make your media plan smarter with India Today Live TV on your connected devices.
Welcome back. There's been a sharp decline in crude prices globally in the last 2 weeks. Sources tell Business Today Television that the government will likely soon do away with the tax on windfall gains if crude prices continue to remain low. Last week, the government had conducted its second review of crude oil prices. As per data received from the Petroleum Ministry, the government has decided to raise tax on domestically produced crude oil to 17,750 rupees a ton from 17,000, while export taxes on jet fuel were cut to zero from 4 rupees per litre. Let's go across to Karishma for more on this. Karishma, when is the meeting and what is the Finance Ministry deliberating on?
Right, Abha. Firstly, a windfall tax is a one-off kind tax that's imposed on firms by the Finance Ministry, and it happens in a situation where the firm is actually not directly responsible for the profits that it's picking up. In the last review meeting, which was around August 1st, government had brought excise duty on exports of petrol and ATF to zero, but what's still remaining is rupees 5 per litre on diesel. Now, the next meeting that is likely going to be around August 16th, as per our sources, may take a major decision to waive off all the taxes if the crude remains to be on a lower note. In fact, as of today latest, if we talk about Brent crude is at almost $96 barrel per barrel, and that is a low price in comparison to a few weeks in comparatively for last 2 months, to be precise. Government is also of the opinion that this is not a way for them to actually earn revenues, and rather a fall will also help their current account deficit, for which they would want to do away with the taxes as soon as possible.
All right, Karishma, thanks so much for taking us through all those details. Shares of State Bank of India plunged over 2% after the country's largest lender reported a weak set of Q1 numbers. We spoke to Dinesh Khara, Chairman SBI, to decode earnings and also the outlook for the following quarter. Listen in.
First quarter results are out, and the State Bank of India, the balance sheet size is above 50 lakh crore, and there are so many other details. I want to request you to first explain the operational performance of the first quarter to our viewers.
We have done well in terms of growth in advances, both in the corporate as well as in the retail segment. Our corporate advances have grown by about 10%. And also when it comes to retail, it's on a YOY basis. And even in the retail, we have grown by almost about 18%. And when it comes to profit, we have net profit of about 6,068 crores, though it is slightly less as compared to last year's profit in the first quarter of 6,500 odd crores. But essentially, it is attributed to the fact that we have a significant amount of MTM, which has mark-to-market depreciation. And that is essentially attributed to the revaluation of our treasury book, which is held in AFS, available for sale. So as the market yields, the GSEC yield moved up to 6.45 as on 30th June. We were required to revalue our assets, and that led to a MTM loss of 6,569 crores. So if we really look at it, MTM is only a timing issue, and we don't have any credit issue. It is essentially revaluation impact only. And if we ignore that, then our ROA would have been 0.89, and as far as ROE was concerned, it would have been 18% plus. So I think as I see the situation, we are quite well off, and we hardly have any slippages. About 9,700 crore were the slippages, and we have actually pulled back about 2,800 crore also out of these slippages. Our credit cost is 0.61%. Our net NPA ratio is 1%. So I think overall we are quite well placed in terms of the likely growth trajectory, and we are seeing decent amount of demand from the corporate side. It is almost as high as about 6 trillion Indian rupees. We have got already 5 trillion worth of loans already sanctioned, but awaiting availment, and similarly another 1.20 trillion is something which is in pipeline and in process. We expect to see decent growth in the retail segment. Corporate, we have got a very clear visibility of the likely growth. So overall, we are well placed to really support the Indian economy, right, and also to take care of the interest of all our stakeholders.
Mr. Khara, several points that you raised, and we'll try and take them one by one. The first, on yields. What do you expect happening as far as yields are concerned, and what kind of impact do you foresee in the quarters ahead?
You would have observed that the yields, even today also, it closed at about 7.30, and we have done the revaluation at 7.45. So that way, I think going forward, my expectation is that as the inflation trajectory is moving, we are hopeful that yield should be trading lower, and at a point of time when just before the policy rate increase of 50 basis point, yields were somewhere at around 7.10. And with the 50 basis point increase in the policy rates, it has closed today at around 7.30. So I think with the passage of time, when the inflation gets addressed, inflation concerns get addressed, and the rupee also becomes a little more stronger, then perhaps, we expect the GSEC yield should remain within a range, and hopefully at that stage, we would not be required to book any more depreciation on account of MTM.
What is your sense as to how the question of inflation and the growth trade-off is likely to be dealt with in the rest of the year?
I think we have not seen any tapering off of the retail demand till now. So though the interest rate has already gone up by about 90 basis points as on June, and even now we are seeing a reasonable trend. So I think I don't think so that it is going to have any dampening effect on the growth.
Mr. Khara, I also have another question, and this is to do with those who are connected with Yes Bank. What about the SBI holding in Yes Bank after the equity infusion that we have been hearing about?
We just before the equity infusion, our stake was 30%, and we are required to maintain 26% stake till 31st of March 23. And we have not yet taken any decision relating to what will be our future course of action beyond 31st of March 23. So that's where it stands as far as Yes Bank is concerned.
Mr. Khara, I come back to the last couple of questions, and this one to do with the home loan book. We've seen real estate sector doing a pretty decent kind of performance, although affordable housing seems to be a bit of a concern. But as far as the bank is concerned, how do you see your home loan book performing going ahead?
Yeah, we have witnessed about 11% growth in our home loan book. It stands at about 5.75 trillion. And we see decent opportunities across the country, rural, urban, metro, all locations we are seeing decent traction. So I think this continue to be a promising opportunity for us.
Have the recent interest rate hikes caused any pain on that front?
No, we don't see any such pain.
What about savers? What can you tell savers, and a substantial part of India's savers bank with you? What would you tell them as far as their term deposits are concerned?
No, we are very mindful of their interest, and we have been calibrating the interest rates from time to time, depending upon what the view we take in our ALCO. So we are very watchful of the situation on the ground, and accordingly we will be calibrating the interest.
My final question, we are celebrating the 75th year of independence, and there is clearly a focus on the economy. What would you say is the trajectory as far as India's economy is concerned in the years ahead, and the target that has been often spoken about, which is a $5 trillion economy?
To my mind, the kind of potential which exists in the country and the kind of capability and the capacity which we have in this economy, I think 5 trillion is actually a reality. This is the way I look at it. We have already seen that exports have really become a very important growth lever. And hopefully going forward, it will further get strengthened. The kind of focus on the PLI, which will actually bring in a sharper focus on manufacturing in the economy. I think it is a very important growth lever, because in the past decade or so, we have seen a lot of growth happening in the services sector, but manufacturing sector was trailing behind. I think this new initiative, this new focus from the government of India will go a long way in terms of creating India as a manufacturing hub too. Similarly, when it comes to the corporatization of the defense factories are concerned, this will also give a further boost to the industrialization. And I think all these factors will eventually ensure that the 5 trillion should become a reality sooner than later.
And here's what else is making news in the corporate world. Reliance has made a massive push in the green energy space. Renewable energy will be its new growth engine over the next few decades. And according to Mukesh Ambani, green power segment will emerge as a growth engine for the company that could potentially outperform other businesses in the next 5 to 7 years. Adani Ports and Special Economic Zones stock under pressure in trade today. The company reported a muted set of numbers in Q1. Profits fell 16% year-on-year as the company's foreign exchange loss widened. Telecom major Bharti Airtel reported a healthy set of numbers, with profits zooming 466% year-on-year. The telco's average revenue per user increased to 183 rupees, up 37 rupees from a year back. The company also saw a robust growth in 4G customers. Amid a tech downturn, Japanese technology investor SoftBank posted a record $23.4 billion loss. Japanese giant's Vision Fund segment saw one of its biggest losses for a second straight quarter. This comes after the company's holdings such as Uber and DoorDash lost value. As per reports, Chinese tech firm Alibaba has fired around 10,000 employees as a part of cost-cutting measures amid the slowing economy. The layoffs come after Alibaba reported a 50% drop in net income in the June quarter. And that's where we leave it on the show tonight. Thanks so much for watching.
Will Metaverse replace our reality? Can it? We don't know that yet, but in its present form, it kind of is a duplicate of the physical world. But the only way to access it is via the internet. The idea of Metaverse has its roots in many sci-fi narratives from the 90s. It exists either as immersive online games, workrooms, virtual concerts, or much more. So what can you do in the Metaverse? Apparently a lot. From watching your favorite pop star to working as personalized avatars in a virtual workspace, Metaverse can make that happen. It will eventually be possible to do exactly what we do in reality thanks to a virtual reality freed from physical constraints. As interactions increase, it will be possible to meet people, make purchases, and pay in cryptocurrency or go sightseeing while staying at home. Well, virtual tourism seems like a nice idea in the comfort of your room. What tools would you need for Metaverse? You'd need virtual reality headsets and a good internet connection for starters. Virtual reality headsets will allow us to immerse ourselves in 3D worlds in the form of avatars animated by our movements. But it will require an enormous amount of computing power to allow millions of people to act simultaneously in that virtual space. Even devices that recreate taste, smell, and touch could be invented. What do you think? Are you ready for the Metaverse?
Make your media plan smarter with India Today Live TV on your connected devices.